All right. All right. So it's 8 o'clock right now, but I just want to show y'all something real quick. So last week we went over the hammer. Let me turn these things off. Hold on. I'm going to put the do not disturb. Okay. So last week we went over the hammer, and I'm going to show y'all what the hammer looks like.
Okay.
So then y'all can see what I'm talking about what I'm looking for. All right. So, and don't worry, I am going to finish the rest of the candlesticks for you all and break those down.
Okay.
I just been a little busy, but I did put the bullish, the red one and the green one in there.
Right. Yes.
So y'all could keep that, but I am gonna put some more in there. But let me share my screen. And
Perfect.
first let's go over the hammer. Let me Oh, what did I do? Oh man, okay. Wait. Hold on for a second. Okay, I guess no, I wanted the other one. I didn't want the flip one. So I gotta go back here. But y'all see my screen?
Yes.
Yep.
Okay. You don't see my screen?
Yep.
Somebody said no? Okay.
I see it.
Yeah, I have my screen on.
We can see it fine.
Okay. All right, so let's go to page 34 because I need y'all to see something. I need y'all to see what I'm looking at when it comes to these patterns and how you all can identify. All right. So the hammer is right here, okay? So this is the hammer. This is, okay, so this is a bullish candle, right? So that means that when you see this and you see it in a downtrend, right? We're gonna go over this chapter again. But when you see it in a downtrend, at the end of a downtrend, it's a possibility that it's going to reverse to the upside. Now, let me show you which stock I'm looking at.
Okay.
Let me show you which stock I'm looking at so y'all can see why I got excited because
I
I'm
know
like,
you come on
oh my
excited,
God.
ready.
Yeah. Yeah. So I turn these off for you because I don't want y'all to see all that stuff that I got going on there. Let me go to Ulta. All right. This is Ulta Beauty. Everybody should know that, right?
Yes.
So look at this right here. So this kind of looks like the hammer right here, the 1 month. Yeah, it has a wick and everything, but I believe it's close to a hammer. Usually the hammer, um, just has, it has a little wick over there. So this looks like a hammer, and this is on the monthly. So
Okay.
look at this. So look at this. This been going down okay, remember, these are 1 month candles. So that means this candle right here is 1 month, 2 months, 3 months. Wait, 1, 2, 3, 4, 5 months it's been going down. And guess what? We see a hammer right here. This is what I wanted to show y'all.
Oh
A
yeah.
hammer, okay? So this is what I was so excited about y'all seeing because I wanted y'all to see the real life. I know last week we were trying to find as close as possible, but this one is perfect. This by the time this candle closes, we have 7 more days. So in 7 days, we'll revisit this so y'all can see what's going on. I do plan on trading this tomorrow, right? I plan on buying some calls on this trade
Okay.
because I
So
see that
swing
hammer. I
them.
see that. Yeah, it looks like it's going to continue going to the upside.
Okay.
Right. So, all right. Now class is in session. Okay.
In session.
I just wanted to show you. All right.
I'm excited.
So,
I'm
but I just wanted,
it.
I just wanted y'all to see how in a real life, chart what we looking for. All right.
Okay.
All right. So now let me go ahead and continue with this. All right, so the hammer, also known as the pen bar. The hammer candlestick is created when the open, high, and close are roughly the same price. It is also characterized by a long lower shadow that indicates a bullish rejection from buyers and their intention to push the market higher. So this is what it looks like. Yeah, the sellers try to bring it down, but they couldn't leave it down because these are the buyers up there. They brought it back up.
Fighting to push it up there.
Yep. So y'all see, remember, when we have a green candle, the opening is from the bottom and the close is at the top.
Okay.
Right? And there goes the lower shadow right there, the tail. The hammer is a reversal candlestick pattern when it occurs at the bottom of a downtrend. Let me go back to here real quick. What do we
because
see
that's
right
the first.
here? This is
That's the
perfect
first
for the
one.
class.
Yeah.
Exactly. Exactly. All right. This candle forms when sellers push the market lower after the opening, but they get rejected by buyers, so the market closes higher than the lowest price. So here is another example. All right. Here's another example right here. This came when it was at the end of a downtrend, and then it reversed. So as you can see, the market was trending down. The formation of the hammer pin bar was a significant reversal pattern. The long shadow represents the high buying pressure from this point. Sellers were trying to push the market lower, but in that level, the buying power was more powerful than the selling pressure, which results in a trend reversal. The most important to understand is the psychology behind the formation of this pattern. If you can understand how and why it was created, you will be able to predict the market direction with high accuracy. We will talk about how to trade this pattern and how to filter this signal in the next chapters. All right, so now, I gotta put everybody on mute. Hold up for a second. We got everybody. Oh, Karen, we had somebody holding. I thought you had my back.
I've been admitting them. Who's holding?
Oh, there was somebody I just let in.
I've
Okay.
just been letting them
Okay, I
in.
guess everybody muted themselves. Okay, so that means I don't have to do it. All right, so let me go back to where we was at. All right, so this is the shooting star, bearish pin bar. The shooting formation is formed when the open, low, and close are roughly the same price. This candle is characterized by a small body and a long upper shadow. It is the bearish version of the hammer. Professional technicians say that the shadow should be twice the length of the real body. So you see how we did the hammer? This is the opposite. This is called the shooting star. So if the hammer was found at the bottom of a downtrend, can y'all guess where we would probably find this? If it's a bearish pin bar, where would we find this at?
At the top.
Yep. Let's take a look. The illustration above shows us a perfect shooting star with a real small body and an upper long shadow. When this pattern occurs in an uptrend, it indicates a bearish reversal signal. The psychology behind the formation of this pattern is that buyers try to push the market higher, but they got rejected by a selling pressure. All right. When this candlestick forms near a resistance level, it should be taken as a high probability setup. Now, when they say resistance level, y'all gonna learn how to chart. Y'all gonna learn where a resistance level is at. That means that a couple of wicks, a couple of candles have touched that level, but it didn't break through. So that's called resistance. And we usually can see it when we put a line across all those wicks and those candles that never passed that area. So that's resistance. And then when it gets to the bottom, which is the ground, we know that that's support. And you'll learn that in this chapter. So right here, we have the shooting star, which formed at the end of a uptrend. And there you go. And there goes the resistance level right there. And then it reversed to a downtrend. So the chart above shows a nice shooting star at the end of an uptrend. The formation of this pattern indicates the end of the uptrend move and the beginning of a new downtrend. This candlestick pattern can be used with support and resistance, supply and demand areas, and with technical indicators. The shooting star is very easy to identify and it is very profitable. It is one of the most powerful signals that I use to enter the market. In the next chapters, I will talk about it in details and I will show you step by step how to make money trading this price action pattern. All right, the Harami pattern, the inside bar. The Harami pattern, pregnant in Japanese, is considered as a reversal and continuation pattern, and it consists of two candles. The first candle is the large candle. It is called the mother candle, followed by a smaller candle, which is called the baby. For the Harami pattern to be valid, the second candle should close outside the previous one. This candlestick is considered as a bearish reversal signal when it occurs at the top of an uptrend, and it is a bullish signal when it occurs at the bottom of a downtrend. Harami pattern, bullish inside bar. So what you would see is you would see this bar right here, the mother bar, and then the smaller candle. Here we got the Harami pattern, bearish inside bar. Let me see. This is the bullish one, and this is the bearish one. Okay. As you can see, the smaller body is totally covered by the previous mother candle. Don't bother yourself with the colors. The most important is that the smaller body closes inside of the first bigger candle. The Harami candle tells us that the market is in an indecision period. In other words, the market is consolidating. So buyers and sellers don't know what to do, and there is no one in control of the market. When this candle pattern happens during an uptrend or a downtrend, it is interpreted as a continuation pattern, which gives a good opportunity to join the trend. And if it is occurred at the top of an uptrend or at the bottom of a downtrend, it is considered as a trend reversal signal. Let's look at an example below. So right here we have the bearish Harami, okay? We got the bearish Harami. There goes the mother candle right there, and there goes the baby, all right? Right here, we have the bullish one that ended up at the bottom of a downtrend, and then it went up, and then we have this one right there, all right? So in the chart above, you can see how the trend direction changes after the Harami pattern formation. The first bullish Harami pattern occurred at the bottom of a downtrend. Sellers were pushing the market lower. Suddenly, price starts consolidating, and this indicates that the selling power is no longer in control of the market. The bearish Harami is the opposite of the bullish. So remember, bearish means downward, bullish means upward. This one occurred at the top of an uptrend, indicating that buyers' domination is over and the beginning of a downtrend is possible. When the pattern is created during an uptrend or a downtrend, it indicates a continuation signal with the direction of the market. We will study in detail how to trade this pattern, either as a reversal pattern or as a continuation pattern in the next chapters. Tweezer tops and tweezer bottoms. Now, for those of you who know Moody, he loves trading tweezer tops and tweezer bottoms, okay? The tweezer top formation is considered as bearish reversal pattern and at the top of an uptrend, and the tweezer bottom formation is interpreted as a bullish reversal pattern seen at the bottom of a downtrend. So here goes the tweezer bottom. So the bearish candle is right here. So remember, if you could change the color of your charts any way you want, I do the red and the green. So in this book, the black bar would be the red and the white bar would be the green. So this is the tweezer bottom. Okay. And this is the tweezer top. So we have the green bar on the left-hand side and we have the red bar on the right-hand side. And this is a bearish candle right here. This is called tweezer top. The tweezer top formation consists of two candlesticks. The first one is a bullish candlestick followed by a bearish candlestick. And the tweezer bottoms formation consists of two candles as well. The first candle is bearish followed by a bullish candlestick. So we can say that the tweezer bottoms is the bullish version of the tweezer tops. The tweezer top occurs during an uptrend when buyers push the price higher. This gives us the impression that the market is still going up, but sellers surprise buyers by pushing the market lower and close down the open of the bullish bar. This price action pattern indicates a bullish trend reversal, and we can trade it if we can combine the signal with other technical tools. The tweezer bottom happens during a downtrend when sellers push the market lower. We feel that everything is going all right, but the next session price closes above or roughly at the same price of the first. Bearish candle of the first bearish candle, which indicates that buyers are coming to reverse the market direction. If this price action happens near a support level, it indicates that a bearish reversal is likely to happen. So here we go. We have the tweezer bottoms right here. Remember that black bar is red. And so let's say, so this is going down, right? So it stopped all the way down to the bottom of that red bar. But then all of a sudden, you get a rush of buyers that bring that second bar, which is the green bar, up. So of course you're like, whoa, if there's a rush of buyers, this thing is gonna go up, right? And that's what they did. It went up. They changed the trend. The chart above shows us a tweezer bottoms that occur in a downtrend. The bears pushed the market downward on the first session. However, the second session opened where price closed at the first session and went straight up, indicating a reversal buy signal that you can trade if you have other elements that confirm your buying decision. Don't focus on the name of a candlestick. Try to understand the psychology behind its formation. That is the most important. So he keeps saying that. He keeps saying don't focus too much on the names, but focus on why this occurred. If you take a look at the left bar, which is the red one, it closed at the bottom. So once the green bar started rising up, you have to put that psychological why that happened. It happened because the buyers came in. They came in and they kept going up. They kept coming in. Because if you can understand why it was formed, you will understand what happened in the market and you can easily predict the future movement of price. So let's go ahead. This is a candlestick pattern exercise. Now, I think that you get some information about Japanese candlesticks. You know the anatomy of each candlestick and the psychology behind its formation. And don't worry if you don't know the psychology behind its formation. I will be doing my own patterns and stuff like that, where I break it down in simpler form than this book. Let's take the exercise to test your knowledge and see if you still remember all of the candlesticks we talked about. Look at the chart below and try to find the name of each candlestick number and psychology behind its formation. So we have number 1. We have number 2 right here. Anybody want to take a guess? If not, that's fine. We can go ahead and,
Number 1 is Harami.
okay, let's take a look. So number 1 is a bullish Harami. It's a bullish Harami. Can anybody tell me what number 2 is?
Number 2 is a tweezer.
Tweezer
Bottom.
top. Let's take a look. Tweezer bottom. Okay, let's take a look. Let's
Followed
take
by
a
a
look.
bullish engulfing candle.
You said what?
I'm saying it's followed by a bullish engulfing candle.
Okay, let's take a look. Let's take a look. I'm going real slow so you won't see the third one. Bullish tweezers. Bullish tweezers. And someone said the third one was an engulfing bar. All right, let's go ahead and take a look at 4. What will 4 be?
Wow.
Harami also.
Well, you know, over here, you either gonna say bullish or you're gonna say bearish. What kind of,
Okay.
all right, let's go ahead and see what we went. We were at 4. All right, let's go with 4. Oops. All right, so 4,
Oh.
5, and 6 are engulfing bars.
Mm.
Engulfing bars. So they engulfed the candle before. They engulfed the candle before it. All right, so that's 4, 5, and 6.
Hmm.
Now let's see 7. What would 7 be? Let's take a look at 7.
Bullish
Is
Harami.
that a Harami?
Harami pattern. Okay.
Yes.
All right. So we got that. Okay, so this pattern shows us that the market enters in a consolidation phase during the session. So buyers and sellers are in an indecision period and no one knows who is going to be in control of the market. So let's take a look. So let me ask you something. By looking at this chart alone, do y'all think this is going up overall or going down? Is the trend upward or is the trend downward?
To me, it's a
Upward.
mix.
It's an
It's
upward
up.
trend.
It's
up.
upward trend.
No,
Upward.
it's an uptrend.
It's an uptrend because look
Yeah.
at this. This is making higher highs. It's going higher, right? It can have a consolidation. Like right here will be consolidation right here, right? Consolidation because it did. You see, right after this
Right
upward
here, babe.
movement, it consolidated. But guess what? Then it broke out, went up, right? Consolidated a little bit, went up over here. Over here was just a hot mess right here. I hate trading these undecision candles. I just hate it. I hate all the, because I don't know which direction it's going. So usually what I do is I put a box around this whole area and I sit there and wait till it makes a decision. So then when it makes a decision, okay, I jump back in. But yeah, overall, this is an uptrend. It's getting higher and higher. So if you're trading with the trend, you're safe. If you're trading against the trend, then you're not going to stay in there for long. You're just probably scalping and staying in there for 10 minutes just to get a piece of crab meat, which crab meat is little, it's nothing. and I don't like to trade like that. So
Rosa, we're at 8:25, just to let you know.
okay, sorry. Okay. All right. So let's take another exercise and look at the chart below and try to figure out these candle patterns. All right. Can anybody guess that? We
Bullish
got number
engulfing.
one.
Bearish.
Bullish engulfing.
Bullish engulfing. Yeah.
Bullish engulfing. You also, if you get confused, know that white bar is green, and you see that the next candles are going up. So it has to be some kind of bullish. All right. So
Rosa,
bullish
can I
and
please
yeah,
ask?
you said
So
what?
yes, number one is bullish engulfing, right? But
You
why
said
is
what?
it not a tweezer bottom?
You said what is a tweezer bottom?
Why isn't it
Number
not?
one is a bullish engulfing candle, right? I agree.
Oh, okay,
But I
okay.
want to know, why is it not a tweezer bottom? Because
Because
to me,
it's not the
okay,
same. It's okay. So this was the tweezer bottom right here, right? They're
mhm,
like the same size. They're like the same
okay.
size. Okay.
So with
I mean,
tweezer
this is the
bottoms and
tweezer
top,
top, but this is the yeah, yeah. It's like the same size.
okay, thank you.
Okay.
Yeah, yes, I'm answered. Thank you.
You're welcome.
Yeah, the previous candle is completely inside that candle. So
Yeah. All right. I forgot where we were at. Was this the exercise that we did? Okay. Um. Now, what is this one right here? Because we were just talking. Was this the one that we just did? Hold
yeah,
on.
that's
Yeah,
Oh, okay. This is another example. Okay. So what is this? 2 and 3.
the hammer.
We okay,
Yeah.
because I was about to say we started with the
Hmm.
hammer. Now what is uh and then it's saying
Bullish
three.
hammer.
Three, I think is saying the whole thing. I think
9.
3 is saying,
Mhm.
let's see. Okay, so the 2 is hammer, 3 is hammer, which is the larger body, and the smaller body, baby, is a harami pattern right here.
Harami pattern.
All right, 4, I think this, what is 4? Let's take a look what 4 is. Bullish engulfing bar,
hmm.
because it engulfed the candle before it.
So it just
So
has.
is that
And
the
I know,
same?
and
So it just,
let me tell you something. I'm gonna have to break this down to you all, because I know what y'all thinking. There's certain instances where it where this one could be an engulfing where it is an engulfing, but you said this one is an engulfing. This one could have been an engulfing too, because it's engulfing that little candle. But engulfing means it has to have a mother bar. It has to have that mother bar to be engulfing.
so when you're doing
And
engulfing, do you count the wicks also or just the body?
you could count the wicks, yeah.
And
Yeah.
is
But
that
it
the
has to be. But the thing is, but it in a perfect with this, you have to have the most of the body. It has to be mostly the body. You can have a little wick, but in order for it to be an engulfing candle, it should have like a strong, you know, either buying pressure or a strong selling pressure bar, which is a bigger bar, and not just mostly wicks, not tails. We don't want to see tails when
okay?
when we talking about engulfing.
Is
Can you
that
see
the
the
same as an inside bar?
You said what? I'm sorry.
Is that the same thing as an inside bar where the body is
Yeah, this one is
inside?
a yeah. This is an
Okay.
inside bar too. Yeah. All right. All right. So we're at 8:30 right now. So let me just read this real quick. All right. Please, I want you to open your charts and do this homework over and over again. You will see that the screen time and practice, you will be able to look at your charts and understand what the candlesticks tell you about the market. Don't worry about how to enter and exit the market for the moment. Take your time and try to master the candlestick patterns discussed in the previous chapters. In the next chapters, I will arm you with techniques that will help you identify the best entry and exit points based on candlestick patterns in combination with technical analysis. Trust me, these price action strategies will turn you from a beginner trader who struggles to make money in the market into a profitable price action trader. So that's all we have for tonight. Don't worry about the patterns. I will be doing my own patterns to break it down for you all, and then I'll put the psychology behind those patterns. If y'all like the way I broke down the other ones, that's how I'm going to break down the other patterns.
Perfect.
All right. So that's all I got for tonight. Oh, we
Thank
went
you.
over last time, but today I'm on point. So thank you for reminding me, Karen.
Appreciate it. You killed it.
Yes, thank
Thank
you.
you.
Thank
As
you.
usual.
You're
Thank you.
welcome. Thank you. And I'll see y'all next Thursday.
Peace.
Same
Thank you,
time.
Rosie. Bye.
Thank
You're
Have a good
welcome.
Good
evening.
night.
You too. Good night.
Be blessed. Bye-bye.
Have a good one.
Bye. You too.